Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where we get everything you need to know in 90 seconds at 9 o'clock. With news, China seems to be moving into a classic liquidity trap situation. Chinese banks extended $680 billion in new yuan loans in July, the lowest reading in 3 months and well below the $1.1 trillion a year earlier. The level also disappointed investors, which were expecting an expansion similar to last year. But the ongoing property crisis weighed on consumers' mood and government bond issuance has slowed. Low interest rates, a fast-rising M2 money supply, and banks willing to lend but clients unwilling to borrow, and savers saving harder is a classic liquidity trap. And India has reported positively on their June industrial production levels, a fourth consecutive month of outsized gains there. EU industrial production data was released for June, and that also brought a positive surprise. It grew 3.2% in the whole EU from a year ago, very much better than expected. UK industrial production rose 2.4% on the same basis. But in the UK, their economy contracted in the second quarter from the prior one as households facing soaring inflation cut back on spending and programs to contain the pandemic were wound down, signalling tough times for an economy that is expected to enter a lengthy recession. In Russia, their economy also contracted, but more steeply in the June quarter as the economic consequences of the war in the Ukraine took hold. Their economy shrank 4% from April through June compared with a year ago. In the US, the latest sentiment survey, this one for August, by the closely watched University of Michigan series, indicates rising optimism. But to be fair, it is only off its deep low for current conditions. However, the year-ahead economic outlook rose substantially, and that is probably significant and may indicate consumers are turned off by the silly steel political shenanigans. In Australia, new home sales plunged 13% in July from June, swinging from an almost 2% gain in June. The sudden slump is being blamed on the recent increase in the cash rate, with builders reporting fewer inquiries and visits to display sites. US Treasury 10-year yield starts today at 2.84% and very little different from week-ago levels. And the price of gold will open today at $1,804 an ounce, which is up $2 from this time Saturday and up $28 in a week, up 1.6%. It's also the first time above $1,800 in 7 weeks. And oil prices start today unchanged at just under $91.50 a barrel in the US, while the international Brent price is now just under $97.50 a barrel. And the Kiwi dollar will open today at 64.5 US cents, which is more than 2 cents higher than this time a week ago. And it's also its highest since early June. Against the Australian dollar, we're holding at 90.6 Australian cents. Against the euro, we're up to 62.9 euro cents. That all means our trade weight index starts today at 72.7, our highest in almost 3 months, and it's a 2.4% appreciation in a week. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. That was 90 at 9.